Felix here, and welcome to this pre-market stream on a day that we haven't seen before. The market isn't just calm, it's eerily calm, it's disconcerting, it's worrying. And I'm going to walk you through here what I do as a former banker, how to assess the day, what are the opportunities, and I'll have a bunch of things here, of course, NVIDIA, the Fed, some actual trade opportunities, how you can get trade alerts, and much, much more. So let's get cracking. I'll share my screen with you. I'm on a laptop. You can see the back end here. And look at the S&P yesterday. Do you notice something? This is the SPY, the ETF of the S&P 500 index. Well, it's not the stock. That did quite well. Try and find the volume candle. Can you see that here? That little greenish bit there hidden behind the purple logo? That's the volume. Normal volume looks like this. That's yesterday's volume. And it means the market is very, very concerned about what's happening here today. Two massive events. NVIDIA earnings today. NVIDIA has been something like 70% of all the profit growth in the S&P. And of course, the Fed minutes coming out today as well. Those two events normally spike a bit of panic, a bit of fear, but we haven't seen the fear. And I will show you why that could be an opportunity in just a moment. But this is very, very unusual. We have to go back a really, really long time to see that kind of a candle. That was, of course, on a week, but on a day, it's very much the same story. You can see here, last 2 days, volume basically non-existent. If we look at the heat map here, pre-market, this can of course change a little pre-market. We're looking okay. We're looking flattish. Walmart's up, NVIDIA is down a little bit. That's probably just people still going. I'm a little bit worried about this. I've made a lot of money. What if they don't beat as much as the market wants them to? And then Tesla down 1.5%. But overall, nothing too worrying here. Now, Bloomberg running with NVIDIA is the final hurdle for mega tech stocks. And of course, they're right. And really what it's all about is how much are they going to beat by? We know they're going to beat expectations, but by how much? And I put a video out on that on Monday. Feel free to check that out if you want to see exactly the numbers I expect us to see. But essentially, if they do a little less than the very lofty expectations, it's not going to be wonderful. Now, how much is the stock going to move, NVIDIA? And this is optionswatch.io, links down below. And I looked at this with you last week, and we were looking at the expected move here. And what the heck's going on my chart? Let me zoom in a little bit more on this. And let me just hit the refresh button here. Something funky going on here. Okay, so the expected move is somewhere between 825 and 1045. So plus minus 10, 12%. That's basically what the market's looking at right now. And that's quite a big move. So you have to be comfortable with the upside and the downside, depending on how you're positioned on this. So big, big bounce expected here from the market overall. A bit of data coming out of the UK. Inflation not brilliant, therefore sterling gains. Why does sterling go up? Because the market's expecting interest rates will stay higher. Does that translate to the US? I don't think so. I think the UK is a particular problem scenario. They've got issues with, well, post-Brexit inflation and so on, which is just something they have to fix basically. But I don't think it applies to the US. So yes, it's not ideal for the UK, but then UK stocks are pretty crummy anyway. Sorry if you're based there, but the FTSE 100 is a pretty horrific index. I wouldn't really recommend it. So what can we do today to make money out of this? Well, here is the VIX. What is the VIX? The VIX is the fear index. And I'm going back here on my chart a year, and you can see we're trading down here at like $12. And how often have we been lower in the last year? Like never, basically. Almost never. Very, very, very low end. When we are that low, what do? Well, I buy a call option on VIX. I'm not recommending the trade, but let me just walk you through how that works. Actually, I'm not buying a call option. I'm setting up a bull put spread instead, which gives me a 20% profit if VIX stays above 1180. So it could even go a little bit lower. And generally, when we are this low, look at when we are this low, it doesn't take a lot of days to kind of bounce up a little bit. And all we need is a little bit of a bounce up, and we make some really nice money here. So I think it's a very low risk trade. I think it has a pretty high chance of success. That's just me speaking. And you could do this kind of a trade for like $83. That's how little that costs, $83. So we buy an $11 put, we sell a $12 put. Not recommending it. If you're interested in this, do this in a paper trading account, in a simulator. Schwab offers them, Interactive Brokers offers them, and then you can play around with it. Don't chuck your money at something just because you see the idea on YouTube. Really, it's not worth it unless you really understand this and you have an exit rule, you have a plan. And we did a whole live trading training yesterday. I gave you my plan. If you missed that one, we might do another one in the coming weeks. But that's one thing I'm looking at. Now, the second thing I'm looking at is I get emails every day from Options Watch, and this started this week. And I've been working on a momentum indicator literally for the last 20 years. My first job in investment banking, my job was to create an indicator that would combine lots of data to give us more reliable bullish, bearish signals. And that's exactly what we've done here. So you get an email every single day. If you go to optionswatch.io, sign up for a 1-month free trial, you will get this for free. We're going to start charging for this at some point. But the people who are already on this, so existing members, we will not charge you for this. Okay, it'll be part of the plan you're already on. It will not be an addition. So we're going to do that a lot. We're going to bring out a lot more features, and the guys who've been in there early get the benefit of getting those features without extra charges. And then people who join later on, we're going to have to charge them just to pay for the setup of it all. But look at the number one indicator uptrend here from yesterday. Eli Lilly and Company, LLY, right? And look at that. You see that nice, big, beautiful bounce candle here? Would you miss that otherwise? You probably would, right? And it's a really nice setup. I think I quite like it. I'm not recommending a trade, but it's a nice setup. Or stock number 2 here is IBM. So look at IBM. Well, look at the bounce on IBM yesterday, right? Would you have missed that? I would have missed that. And it isn't just an increase, but we've exceeded the previous highs here and here. We've broken out of the misery on very, very strong volume. So it's those kind of indicators that are going to save people who are trading or looking for opportunities an enormous amount of time. And we ping those out to you every single day. So if you want to check that out, do, and you will get them every single day. You'll get a trend alert every single day. At the end of every trading day, you get that, and then you can prepare and look at it, and I think do quite nicely. We're also back testing this, so we'll give you some data. I've done back tests on Apple so far, which is one of the biggest stocks out there, and it doesn't move so erratically. And the numbers are insane, really, really insane. I emailed some of you about that a few weeks back, and so jump on that if you wish. Optionswatch.io, grab yourself literally 30-day free trial. You get access to this feature. If you then decide to stick around, you'll keep the feature. But if you join us later, you're going to have to pay additional for these alerts, and there's a lot more coming out there. So from my point of view, the day is looking, it's the day before. It's the day before the storm, the day before the invasion. Hopefully NVIDIA comes in and beats by enough margin to make the market go, oh, that's all right. And hopefully the Muppets at the Fed are coming in kind of as expected, sort of just the usual higher for longer, but without moving or without taking rate cuts off the table. And if you listen to the Fed's speeches in the last 2 days, there've been like a dozen of them literally. It's kind of a mixed bag, and that's kind of what we want. I'm happy for a mixed bag. I just don't want them to tilt really, really, really hawkish, because that's really what would hurt us. So very, very low fear in the market right now. That's unusual. I think the market's under assuming fear levels. So I'm looking to make money on fear and possibly fat loss drugs and IBM and a few other trades we might put on today. I love you for tuning in. I love you for joining. Go get yourself that optionswatch.io subscription. It's literally a risk-free proposition. For an entire month, you get it free of charge with all the goodies and the alerts and everything thrown in. I wish you a glorious day. It's a travel day for me here today. I'm leaving the blue sunshine here for somewhere else. You'll be seeing me there in a couple of days. And thank you for tuning in.